What's up, market snipers? Welcome back. This is Jesse. We have a couple questions that we need answered on this Bitcoin chart. Is Bitcoin about to crash? And if so, what would be the next buying the dip opportunity? That's what we're going to take a look at. We're going to dive into the charts together. First, let's do a quick recap. So if we go back to October 15th, we're looking at the Bitcoin daily chart. So here's Bitcoin, had a buy signal on October 15th. As you can see, once it got into October 20th, the candles already flipped orange. What that means on the sharpshooter candles 3.1 is that once the candles go orange, then it's starting to get overbought. But one thing we always talk about, whether it's the Discord, the Twitter X app, or on YouTube, is that price can remain overbought or oversold for much longer than what people think. So it started to get overbought October 20th. Sometimes is when the magic happens. We actually have a magic wand on the indicator itself because, sometimes when the magic happens, right? So price started to keep pumping up. And so from the buy signal to this very top wick here is about 40%, very close to 40% to the top wick. Then it kind of retraced back down here, dropped back down, pumped all the way back up, almost identical, basically wicked with the same exact spot where the other wick was, about 40%, followed by a reverse candle. So buy signal, 40% move, followed by a breakdown, followed by a pump back up to the exact same possible double top for the wick itself, followed by a reversal candle, right? So before we get into the reverse candle, we want to take a look at a couple things here. On our sharpshooter RSI indicator is showing us that we have also bearish divergence, right? So this red line is showing us that we have bearish divergence. The indicator isn't picking up bearish divergence to November 15th, but if I change the inputs on it, most likely it will also tell us that there's bearish divergence going down to here too. So we have bearish divergence going from October 25th all the way to November 15th. So basically almost 3 weeks worth of bearish divergence. And after the bearish divergence, there is a reverse candle. And why that is important to me is because if we look back here on the bottom, right? If you look back here on the bottom, we had bullish divergence going all the way to September 11th. On the very next candle, we had a reversal candle after the bullish divergence. And you can see from the bullish divergence to September 11th, then a reverse candle on September 12th. That was the pivot low on September 12th. Not saying that it's 100% accurate every time. Not saying it's a guarantee that's going to happen again. What I'm doing is I'm pointing out that we had bullish divergence followed by a reverse candle on the very next candle. Now we have bearish divergence followed by a reverse candle on the very next candle. This could be the pivot high here, just as it was the pivot low here. Now, it didn't just take off to the upside and from the reverse candle pump up, 40, almost 47%. It took a little bit of time to build up. You can see there's a higher low, and then it took off 40% to the upside. So will this happen again? What we're looking at here is if there is bearish divergence there is bearish divergence. So if we're looking at bearish divergence, we're looking at reverse candle. A couple other things that we're looking at here. I've got a whole list here. We had a 40% plus move since the last buy signal. Check. We had bearish divergence for the last 2+ weeks. Check. We had a reversal candle. Check. We have an RSI sell signal. So on the RSI indicator here, we had a sell signal on November 14th, 4 days ago, right? So going back to it, check. Second MACD bearish crossover. Go back here, pull up the MACD indicator. You had a bearish crossover on November 5th or November 6th, right around there. It flipped back bullish. It's also looking like divergence, right? So not only is the RSI picking up divergence, but the MACD indicator is looking like bearish divergence as well, because you have a peak here, you have a lower high here, and then it crosses back over officially on November 13th for a second MACD bearish crossover. So going back to the list, we have second MACD bearish crossover. if we're getting another bull cycle again, if you stick to the end of this video, you're going to find out exactly what I'm talking about. Then usually we'll have one more correction. We've been kind of talking about this on the videos, but this is what we're going to talk about on this one is where could we see a retracement to on Bitcoin? And then secondly, what is the timing and the potential of the next buy the dip scenario? So two things to watch for. Where could we see price go down to? And we have several reasons why that I'm going to show on the chart here very shortly. And then secondly, what would the timing and the potential buy the dip scenario would be for that next breakout, assuming we get another bull run here right before the halving. The halving is scheduled for, or not scheduled, but estimated for April 18th. So what could we see on the next buy the dip scenario? So let's take a look at it. We're going to turn on the drawings here right now. So we kind of zoom out here. I put on this fractal, right? This fractal is pulled from down here. So just for visual purposes, I took this fractal here and this move up and then just kind of flipped it, right? Flipped it. And so that's what we're looking at here is we have this fractal from the reversal down here just flipped back over. So just like I said, I don't expect this fractal to play out exactly. Obviously, I don't think that, but it's just for visual purposes that I don't think price just goes straight down, right? I think we kind of battle through, especially since the weekly chart is still ultra bullish. I think it takes some time to play out. And you can see that after this reversal candle, I'm expecting at some point a lower high gets put in on this, going through this battling of this topping pattern, right? After bearish divergence, after reverse candle, a lower high, and then possibly another even lower high, very similar to like this higher low, right? Higher low, higher low. Again, this is just a flipped fractal as an idea. So a lower high, and then a correction down. So I didn't draw out the typical 4 targets to the downside. I just kind of put this oval target area from about 31,500 down to 29,800. I have several reasons. It's a major confluence area that price could come back down and retest it when we don't exactly know when, but we do have that bearish divergence. I would expect, price to come at least back down to 34,500 ish, right? And that would be, probably pretty close to like target 1 or target 2. And then this is basically where target 3 and target 4 come in, along with a couple other things as well. So kind of looking at it from here, let's put on the 200-week moving average. You can see the 200-week moving average is coming in. It's currently at 28,700-ish, just under it. And, by the time, price comes back down here, it could be up above 29,000 since it's a slow moving average. And maybe price doesn't come back to retest it. Maybe they front run the price and do some profit taking on this next correction just above the 200-week moving average. We've seen this play out on a few other things like gold, right? Just as an example, price retraced all the way back down just above the 200-week moving average. And then the short squeeze was in after that and took off to the upside there. So that's one example. There's some other examples as well, but gold is an example where price did come back down. It took some time for gold to go through this topping pattern as well, right? Took weeks, if not months. Like if you're looking at this from the reversal candle to before it starts to really break down, on this fractal, just as an idea, that'd be about a month, right? It would take about a month. And then if it did go down this correction, we'll get to that point here in the near future. But a couple things I want to point out was we did have the bearish divergence. It could go through this topping pattern, start to put in lower highs. And then once it does, it's breaking down from this trend line here. Maybe it comes back up, back tests this trend line. And again, this fractal only shows candle closes as an idea. Doesn't mean it's going to work out perfectly. Obviously, none of this is financial advice, for educational and entertainment purposes only. It also doesn't show the wicks. So this big wick down here, it wouldn't show it. if it spikes back up and then comes back down, it won't show those spikes. If it spikes down here, on these candle closes as it's going through this topping pattern, right? It's not going to show the wicks on this fractal. So it's going to look a little bit different in real time. It's going to look a little bit different overall. You can see all these wicks, but you wouldn't even actually see it on this fractal whatsoever. So that's kind of like the maybe 2 weeks, maybe 3 weeks, possibly even 4 weeks going through putting in lower highs, right? Finally possibly breaking down from this trend line and then coming back down, hitting target 1, hitting target 2, possibly target 3, and possibly target 4. There's another reason it's an even longer moving average that was currently at 29,350. I did a Twitter X post, so go take a look at that one over there. It's called the blue line, right? So the blue line is currently at 29,350. That also happens to be a confluence area into this box. So we'll see if price comes back to retrace there. There is a big push up here and not much price filler in this area. So it seems like it makes sense to come back here as a value area where bigger players will come back in and buy the dip scenario. So what could this buy the dip scenario play out kind of like, scenario look like, right? So this is what we kind of did. We kind of drew this out here. Just pretend here. This is a lot of speculation, right? But just pretend here. You've got this lower high. You got this lower high. So we draw out this fake phantom downward trend line, right? And we extend it out. Well, where did we extend it out to? We extended it out to the projected estimate of the next halving, right? And so I did my research. I've been doing my research on Bitcoin previous cycles. We've talked about it. We've covered it. I started doing a ton of research back in 2021. So I've been studying it, right? So based off of studying it and looking at a couple of different things, we got the Bitcoin halving tracker over here. You can see that, they all kind of start off, after the Bitcoin halving. You can see that they don't really fully start the bull run until after the halving, right? Bitcoin price after halvings, right? So Bitcoin price halvings and happens and then goes into the bull run, right? And then goes into the bigger bull run. And then they all pretty much, except for the first cycle, you can see that they all kind of top out, within like 50 to, I don't know, 50, just call it 50 to 100 days. Then they all kind of bottom out within like 100 days. And then they kind of like go through this rally in the bear market before the halving and kind of pumps up. You can see, right around 1,300 days, possibly even, past that. We're getting very close to the 1,300 days. And so it kind of lines up, right? So if we start to go sideways, very similar to call it 2016, right? It goes sideways, kind of pump, breaks down, comes back up, maybe even puts in a double top or a lower high. It's kind of hard to tell in this chart here, but puts in double top or a lower high, right around 1,300 days, and then goes into that correction to about 1,350, 1,400 before the next halving. It all kind of lines up again, right? So assuming we get another bull run, assuming we get, if that happens, then we're expecting that, it kind of peaks out here, whether the peak is in and or puts in like a little double top here. Every cycle is going to be different. Every time we got to play it completely different, but there are a lot of similarities overall, like when it takes off, when it kind of peaks, and then when it breaks down, and then when it kind of rallies and then corrects possibly back into the halving. Well, that's what we're kind of watching here, right? So if this scenario were to play out, right, and it's a lot of speculation, I would expect that correction to happen before the next halving. And after the correction, it finds support at a key target area, whether that's the third target or the fourth target, which is even lower, right around maybe even that $30,000 area, right? Kind of lines up with the fractal too, $30,000, finds support, bounces back up, right? And then takes off to the upside. And that would be your higher probability of buying the next dip for the next bull run. So how could that look, right? So even if this fractal happened to play out where it comes down with wicks, comes back up, puts in a lower high, comes back up, battles, and then drops back down. By the way, I don't expect this fractal to work out perfectly, but if it does that, kind of bounces up like this, maybe comes like that, puts in another higher low, and then takes off to the upside before the next halving, right? So before the next halving, that would be the next buy the dip scenario. If it played out similar to gold, it would actually come down like this hard, right? And then short squeeze back up, come back down, back test it with a nice retracement, put in a higher low, and go like that. So two different ways that this could play out. I mean, there's several ways this could play out, right? So that would kind of be this would be like the gold. This would be like the gold way, right? And it would put in that higher low here. So it broke down and then shot straight back up above this downward trend line, and then came back tested it, put in a higher low, and is bouncing off of it, right? So that would kind of be the gold way. This is another way that I've seen Bitcoin play out several times in the past. Puts in another higher low here, and then bounces and breaks out here for the longer term. Again, probably in March 2024. In the past, not saying it's going to happen again, but in the past and previous cycles, you can go back and do some back testing and your research on it. And if so, it could happen again 1 month before the next halving, which is estimated in April 2024. All this kind of lines up as the potential next buy the dip opportunity. So if you miss this move here, right, and you're feeling FOMO and you're seeing all the perma bulls out there, not to worry. It seems like, and it's not a guarantee, but it seems like you might have one more major opportunity to buy in low, possibly in the $30,000 area. We had bullish divergence followed by reverse candle. We had bearish divergence followed by reverse candle. It only makes sense, too much sense for it to retrace, kind of fill this area here, hit these targets here, find support, put in another higher low, and then take off to the upside. So with that, thanks again. Thanks for all of your support. The goal on this video is to get 100 plus likes. Help me, help you. Smash the subscribe button, smash the like button, and we'll see you on the next one.